My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
All right, when it comes to investing in single family homes, there's all sorts of options, right? There's long-term buy and hold and renting out to folks unfurnished long-term. That's kind of the traditional way. There's furnished mid-term rentals. There's furnished short-term rentals. Which one's right for you? There's all sorts of different options. Well, today, my special guest is Paul Campbell. And Paul has been in and around real estate for a long time. This is his bread and butter. Like, he helps people buy and sell properties as a realtor. He's also a very active investor himself. He and his wife have built up a very significant portfolio of long-term rental single-family homes. And now he's getting into the whole luxury short-term rental space, and he's looking to build a big portfolio, 100-unit portfolio of luxury short-term rentals. So, Paul Campbell, welcome to the show. Great to have you.
Hey, thanks for having me. I really appreciate it.
So, Paul, like I mentioned, there's all sorts of ways to invest in single-family homes. Sounds like you've done a bunch of them. So, kind of compare and contrast, and tell us why you're making the big push from long-term to short-term.
It's funny, what do they say about innovation, right? It's a product of need or something like that. In our case, it's usually a product of disaster. So, we have a pretty extensive flipping business, and in our Portland market, for example, the long-term traditional rental market really isn't going to cover your nut on most of the properties that we do. Yeah, average home price right now is pushing $650, right? So
it's not going to cash flow. Yeah,
it's not a cash flow. So we ended up with some flips that didn't go well. Yes, it happens.
It happens a hell of a lot more than most people know.
Well, I'm willing to admit it because there's amazing learning lessons in these moments, and this company is kind of brought from one of them. So our property management company, which is now just starting to take off. We're onboarding 15, 20 properties just this week, which is a record by far and away. But so we had two flips in particular in the Portland market. They did not go well, and I really didn't want to take $100,000 loss on each one of these things. So we started kind of exploring avenues to avoid that. Kind of dug into the laws, and Portland's not a particularly short-term rental-friendly place. So. No. But there are ways that you can accommodate the rules and still put something out there. In this particular case, we got pretty lucky. Better lucky than good. The one flip that we stood to lose the most on was just outside the Multnomah County line, and literally by blocks. And it was not as restricted. We threw this thing on the STR market, and it was a beautiful property, but it would have rented for maybe $3,500, $4,000 on the long term, and it's doing about $9,600 gross a month for the last 12 months. So, thus it began.
Light bulbs go off.
Yeah.
Well,
that cash flows, right? Now it was a lot of work, so we started looking into other property management companies, and we had one or two other properties that kind of fell down this hole, right?
Yeah.
And my wife, God bless her, she's more detail oriented than I am. So she handles a lot of the PM management. And by a lot, I mean all of it. I structure PAs and find things that we acquire and put all that stuff together. That's where my brain goes. But she knows that women need to have full length mirrors in the master bedrooms and where the hairdryer needs to go and all these crazy details that maybe it's a man thing, maybe it's just a me thing. No idea.
Well, I've been worried about hair dryers for quite a while myself.
Well, so. Same boat, buddy. So she dives in, and we find that the short-term, mid-term rental management space is not being particularly well managed. And no disrespect to anybody out there doing it at a high level, but a lot of the big players we had some pretty bad experiences with.
So you tried a number of these management companies yourselves.
We were in the throes of doing it ourselves and never officially switched over to other management companies, but we did a lot of research and we went and stayed at a lot of other people's places. And that's where we discovered a lot of holes.
Okay.
Things like clogged master bathroom sinks for 3 days, not being able to reach people when there's maintenance issues, stains on the sheets, little stuff. But it all adds up. And when you're looking for a vacation experience, those types of things really play a part. And
well, not only that, if you're the owner of that property and your livelihood is based on reviews.
Yeah.
Yeah.
Exactly right. So we just took it upon ourselves to do it. And another accident, word gets out and people started approaching us and my wife in particular. And it's like, we're not having much luck with our management company.
Yeah.
In fact, we were like, well, maybe we should just start a company. So we kind of soft started a company, partnered with some really amazing people in the Portland area that run a great real estate team. And we put our heads together. We took over one asset that was managed by a big player in space, which I don't like to talk trash, so I'm not naming. But they had about a 9% occupancy rate. It was on the Oregon coast. And when my wife took it over, within 30 days, it was up to over 90% occupancy.
What was the original occupancy rate?
It was under 10%.
Oh, wow. 9%.
And it went to 90 plus.
Wow.
In 30 days. Obviously, that's a big cash swing. And I don't know if that was a fluke because those are not normal numbers, obviously. We don't have that kind of a swing all the time. But maybe it slipped through the cracks, maybe not. I don't know what happened there, but those are real numbers. And as we grow, it's very important to us that we maintain an extremely high level of service, a wonderful vacation experience for the tenants. We cherish our reviews and all those little details. Man, my wife is right on it. If I had to run it, it would not be successful.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
Okay, so what role are you playing in the company at this point, Paul?
So I do the acquisitions. I structure all the deals.
But you're managing other people's properties, or are you looking to build up your own portfolio of owner properties as well?
So once it goes to we are managing it for somebody else, I really turn it over to the wife. She's got the team already built pretty good. Several assistants, a couple of VAs, handyman, the whole structure.
So is it all focusing around Oregon?
She runs it. Now we're here in Indy right now, onboarding a couple of properties. We've got Oregon. We've got Texas right now. We're looking at something in Ohio. Laws dependent. So the STR the STR space in particular is interesting. Some states don't even require that you have a property management license to manage STRs. Like, for example, Arizona. But if you go over that 30-day mark or turn it into a long-term property management company, then you do have to get licensed. So there's every county, state, city, it's different.
Yeah.
Well, and that's one of the things that I do bring to the table is I analyze all the markets and make sure that we're doing the right things and putting ourselves in profitable places. Not every house.
You're taking over management for people that already have the property set up as a short-term rental, I'm assuming.
And we're happy to do that, but we'll also help you start from scratch.
But what are you typically doing these days? Like the 13 that you're bringing on these days, are they existing or are they people that just kind of came around to the idea of doing short-term rentals?
These are people like us. They had a flip. They had a project that's not as profitable. They have a long-term hold that they're exploring. What does it look like as something?
I see. So that's why you go on site to kind of onboard them, because you got to get the thing furnished and up to snuff to actually list it. Okay, now I'm good.
And we do have that service within our property management company, or we provide you with a list with links of all the things that have worked well for us that my wife has already sourced. the nicest stuff for the lowest price. A couple years worth of trial and error.
Cool.
So,
That's smart. That's really smart. Okay. Now, when it comes to your own personal portfolio, where's that going? Where do you guys, what are the goals for that?
so we decided to put our money where our mouth is, and we are really kind of aggressively getting out of the long-term traditional rental space. We've just discovered that the profit margins are lower and the liability is higher. Like, those are people's homes. So,
Yeah.
And the other thing that we've noticed is they get trashed. Short-term, mid-term rentals have turnover. You're in and out of those places. They don't get trashed. And
everybody kind of thinks it's the other way around, right? Everybody's assuming that long-term rentals, it's their person's home. They're not going to trash it. But the short-term rentals, people on vacation, they're going to trash the hell out of it. But it's the opposite.
Not. These are responsible people that have, probably, we don't income check people, but, they're going on vacation.
They've got a credit card that can carry whatever you charged them or Airbnb charged them to be in there. Plus there's insurance. Plus, there's serious consequences if they do trash the place.
100%. And you're in it in the next 3, 4, 10 days, or even on midterms every couple of months. And, we're clean people, right? But every time we move, you pull up a couch, like, just by virtue of living in a house, you can trash it. There's a reason these things have depreciation tax write-offs, right? They get beat up.
Yeah.
So it's just been a better space for us now that we figured out how to work it. And I understand why people are kind of afraid of it. I think the biggest objection we hear is the legislation, right? A city and touch you down.
Yeah.
So we really look at everything with multiple pivots. We can move things to midterm. We have platforms that we can use for events, corporate retreats, weddings, you name it. If the asset is I guess you could say nice enough or flexible enough. I'm not sure what the appropriate word is here, but we can use these spaces for a lot of different things, and we can monetize all of it.
Yeah, smart. So getting back to the question then, where are you taking your own personal portfolio?
So I focus on finding and developing assets for our personal portfolio, and we have this fund that we just started called the Allurian Fund, which I'm really excited about. We discovered that in short-term rental friendly markets, like for example, a Phoenix, there's a lot of short-term rentals, right? Pretty saturated because it's super friendly, but not in the luxury space. So if you look at properties in the Phoenix area, for example, you'll see, our sweet spot is properties from 3 to 6 million. Right now, those properties are kind of having trouble selling quickly. So we've been able to go in and offer sellers some pretty buyer-friendly terms, and we're getting it. And then those.
So when you say buyer-friendly terms, is that a politically correct way to go back to your flipping days where you're,
actually, we've come up with a pretty win-win scenario. If we're being honest, like the current approach to sellers is, hey, you either have to take it in the shorts by dropping your price a couple $100,000, or we'll give you your price, but you got to give us decent terms.
There you go. So the loaner financing is what you get.
Yep. So I call it buying terms. And if you look, these spaces that are larger, have a higher sleep count, have higher amenities. Some of them in the Phoenix area are grossing over $1 million.
Wow.
And it's not saturated because most people don't want to play in that space.
And are these properties that are already existing short-term rentals, or are these rich guys' properties that are just trying to?
All of the above.
Yeah.
Wherever the terms are the friendliest.
Yeah.
So we just go through and we look for these properties that we think we can appropriately monetize in various ways, and we toss them an LOI and see if they're interested.
Okay. So they say yes, and there's some sort of owner financing in there. Yeah. Where does your fund come into play?
So that's the best part. Like, you can spend money really fast on $3 to $6 million houses, right? Even with good friendly terms. So we better start this fund or we're going to run out of money. So Other people can invest in this little niche that we found, and we are projecting with some very conservative numbers, really great returns for our investors. So if there's any,
So you're going to use the fund to come up with the rest of the down payment money that's going to be required to purchase these. You're going to get some
down payments, any amenities that we need,
furnishings,
repairs.
Yeah.
We're averaging, 500 to 800,000 in acquisition costs all in per asset.
Okay.
Which in the grand scheme of things on a $6 million house, I mean, you have to put a lot more down on that, but it's still a considerable amount of money, and we want to get to 100. So that's a lot of money. So that's where the fund comes into play.
Okay. Makes sense.
I wish I could take credit for it, but my business partner on the fund has structured it very brilliantly into something that I recently learned about called tranches. So we have 10 asset tranches, and assets are all over different markets in the country. So we can mitigate risk that way. It's like diversifying your assets by diversifying your markets. We do cost seg studies on the acquisitions, and we pass it on to the investors. There's a preferred return for the investors. They get paid first. Honestly, if somebody's interested in it, they should talk to my partner and myself, because he's way better at playing it than me. I just like the pivot, and we've been able to help people that are needing to 1031 exchange. We found a way to do that and involve the fund. And there's a little known tax code where you can actually sell a house to the fund and have a tax benefit. That's like a 7 something. Oh God, please don't make me try to remember it.
Let's not talk about it if we can't explain it very well, because I sure as hell can't. So there's all sorts.
Let's leave that to my partner.
Yeah. Awesome, Paul. Well, hey, time flies when we're having fun. It sounds like you're up to all sorts of great stuff with the short-term rentals. Congratulations on the pivot. Congratulations on the property management company. And you and the wife building up the portfolio and finding a unique way to get that funded and help other people get into short-term rentals without having to deal with all the crap. Really, really smart. So if people want to find out more and connect with you, where should they go?
Well, the easiest answer to that is probably the property management website, staysavvy.biz. We would love to analyze any properties you have for free. We'll give you a report anytime you want it. Of what your short-term rental income could potentially look like, mid and long. You compare it, send you all the data, help you through the process, whatever you need. And if there's any interest in the fund, just leave a note on that page, and we'll set up an appointment to go over that, because obviously that has to be, very specific.
Yeah. What's the website again?
It is staysavvy.biz.
State Savvy?
STAYSAVVY.biz.
All right, staysavvy.biz. That's a good name. Awesome, Paul. Thanks for being on the show, man.
Yeah, sorry to chew your ear off. There a lot going on.
No, that's great. All right, everybody, take care. We'll see you on the next one.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.